Hello, good morning everyone, and Happy New Year to everyone. Welcome to a brand new year, and a brand new year also in the markets. So today is the start of the 2 weeks live trading session, and today, obviously over the 2 weeks, we'll be concentrating more on the practical side of trading. So we're going to be assessing the markets and looking for trading opportunities. As usual, all the sessions will be recorded, so you'll get a link to download the recordings for all the sessions. Try and make as many as you can, but if you can't make them, don't worry. But like I said, do register for all the sessions. So we're going to be concentrating on the 3 M's over the 2 weeks, which is mind, money management, and our trading strategy of method. So the aim is to keep our discipline as traders, stick to the plan, and not use emotion with our trading. So we'll stick to the plan, try and assess the markets in an objective way, and apply money management. And as you all know, money management will depend on your capital. So how much you have to trade with will determine obviously how many markets you can trade. So the main market will be focusing on over the 2 weeks will be the Euro-US dollar. So the Euro-US dollar will be the main market we'll focus on. But obviously, if you have any other markets you're trading according to your money management and your capital size, if you're trading other markets, then do let me know if you want us to assess those markets too. But the main one we'll be focusing on will be the Euro-US dollar. Okay, so without much further ado, obviously during the 2 weeks, do ask as many questions as you can. That's the aim of the 2 weeks, is to assist you or help you with trading. So take the opportunity to ask as many questions as you want to. And as usual, if you want to ask any questions, do click the hand button or send your questions through to the question box. Also, like I said, if you are on Twitter, or even if you're not on Twitter, you can open a Twitter account, which is free, and follow me on Twitter, just so that we can also update you in between the live trading sessions. And also you can still also ask me questions in between the sessions via Twitter. And again, our Twitter handle is www.twitter.com/dkbMARKETS. Okay, so let's kick off. And as usual, according to our trading plan, we'll start off by looking at the economic calendar. Obviously, we know today is not a public holiday, so there are no holidays today in USA and UK. So from a public holiday point of view, there are no public holidays. Again, if you want to know when the public holidays are, you can just go on to Google and Google public holidays in UK and USA to find out when the public holidays are. So today, we don't have any public holidays in UK or USA. So the next thing we'll go on to is the economic calendar, and there are no reports of high importance due out today. So no reports of high importance due out today, but we have a report of medium importance out today, because again, you always have to note what the reports of medium importance are about. And we can see here that at 2 p.m. GMT plus 1, so at 2 p.m. GMT plus 1 today, we have the German Consumer Price Index. So as we all know, the Consumer Price Index is always a report of high importance to note. It is stated as medium here, but obviously since it's a Consumer Price Index for Germany, and we know Germany is one of the major economies or the major powerhouse in the Eurozone, so we need to take note of that report due out at 2 p.m. So although it's noted as medium here, we're going to take it seriously because it's coming out from Germany. So we're going to be very careful trading prior to 2 p.m. Okay, so that's the only report to note for today. Another good habit to have, which I do, is to also check the Market Watch, this financial website, because on Market Watch, again, it's good to know what's happening in the financial markets, because obviously what's happening in the financial markets can impact your trading, so it's good to keep an eye on the financial market. So I usually also have a look at Market Watch to see what's going on in the financial markets. I just more or less look at the headlines. Obviously, if any of the headlines interest you, you can click on that and read more about the headlines. But you can see here it says why job reports likely will shape stock markets week. Obviously, this is referring to the U.S. unemployment rate that will be due out on Friday. So remember, the U.S. unemployment rate comes out on the first Friday of every month. So although the first Friday of this month was the 2nd of January, well, obviously because of the New Year holiday, it's been announced this Friday. So this Friday is really classed as the first Friday of the month. So we have that this Friday, the U.S. unemployment report or the U.S. non-farm payrolls. So that's what this report is talking about, that report coming out this Friday is likely to shape the markets. And as we know, the U.S. unemployment report affects all markets. So while we are trading for the rest of this week, we need to have at the back of our mind the U.S. unemployment report is coming out on Friday. So again, there's a likelihood the markets might be waiting for that report. And again, we also have the UK interest rate decision coming out on Thursday. So we have the UK interest rate decision coming out on Thursday and the US unemployment report coming out on Friday. So those are two big reports coming out later on this week, which we need to have at the back of our mind. Obviously, we can see oil prices are still falling. So again, like I said, just have an idea of what's going on in the financial markets. You can see the Greek euro exit caused great disaster. So you can see that the Eurozone are still having problems, and some of the European countries are still having problems, which could impact obviously on the euro, US dollar, which we are trading. So again, that's another thing to be aware about. Just check the Market Watch website and have an idea of what's going on. Okay, so that sort of laid the foundation for us for the markets today. So we know that there are no reports of high importance, but we have the report of medium importance, the German Consumer Price Index coming out at 2 p.m. GMT plus 1 today. And then we also have at the back of our minds that the UK interest rate decision is due out on Thursday and the US unemployment rate on Friday, which are two major reports that will shape the markets. Okay, so with that in the background, we'll go to the charts and see what we can do today. Like I said, the main market we're focusing on is Euro-US dollar, but if you want us to look at any other markets afterwards, do click the hand button or send your request through the question box. So you see, looking at the Euro-US dollar, the market is currently trending sideways. We can see where the market gapped when it opened last night. I'll just make this a bit bigger. So you can see that was where the market closed Friday night, and then you can see where it opened on Sunday night. So you can see there's a gap between where the market closed on Friday night and where it opened on Sunday evening too. So you can see that's a gap in the market. So that's what you call a market gap, because you can see literally there's a gap from one point to the next point. And again, this is just to remind you, this is why you do not let your day trades go over the weekend. Obviously with swing trading, you can let your trades go over the weekend, but when you're day trading, or if you're in a day trade, you make sure you close all your day trades on Friday night, because you could have a gap over the weekend, and obviously if it gaps against you, you can lose more than you bargained for. So talking of swing trading, we'll start by looking at the market on the daily chart. It's always a good idea to have an overall view of the market you're trading. So this is the Euro US dollar, like we said. This is the daily chart, and you can see overall the Euro US dollar has been trending down for a long time. In fact, it's been trending down since May of last year. So you can see since May of last year, the Euro US dollar has been trending down. So this is obviously bearish market. It's just been falling. It's been in free fall. So again, in a free falling market like this, you'll get more sell opportunities from a day trading point of view than buy opportunities. So again, when we go back to day trading, you need to have at the back of your mind that we're day trading in a falling market. So you don't want to, have 2-3 attempts buying in a falling market. So you always have to also have that at the back of your mind. So from a swing trading point of view, looking for swing trading opportunities, I tend to use the moving average 50 to swing trade. So you can see today, if I just put my cursor over the candlesticks from today, and then obviously I'll look at my data window here on the left. So that's the data window there on the left. So I'll put my cursor on today's candlestick. You can see the date is the 5th of January, that's today. And the moving average 50 for today is 1.2401. So I'll just round that up to 1.2402. And I always tend to have a marker on that, 2402. So I use this powder blue line as a marker for where my moving average 50 from the daily time frame is, so I know when I go to the 5-minute time frame, I can see still this marker telling me where the moving average 50 from the daily time frame point of view is. So obviously from a swing trading point of view, I tend to buy just above, because obviously it's falling, so I want to buy when the market breaks the moving average 50, so I just want to buy about 2 pips above that moving average. So if I want to do that, I'll just go to the new order and select my pending order. So it's to buy when the market breaks that, and I just want to buy 2 pips above that, so that'll be 1.2404, and use a 100 pip stop loss, so that'll be 2304. And that's it. So that's my pending buy order from a swing trading point of view. So we're going to be checking that every morning and adjusting that every morning with the moving average 50 till the market gets there. So that's the swing trading done for today. So I've just got a pending buy order just about 2 pips above the moving average 50 with a 100 pips stop loss using the daily time frame. So that's the swing trading point of view. So now we'll go to the day trading, go to the 5-minute time frame. So we're down to the 5-minute time frame. So like I said earlier, the market gapped over the weekend. It gapped down, so you can see this huge fall in the market and then went back up. So you can see that's the low. The market went to that low point and went up and started to trend sideways. So I've marked out the sideways trend, that's the high of the sideways trend, and that's the low of the sideways trend, and we're going to follow this market. Obviously, like I said, this is the main market we're going to follow over the next 2 weeks. So we're going to follow the trend of this market and follow the activity of this market over the next 2 weeks. So we can see clearly from today, Monday, the market gapped down and it started to trend sideways. So that's clearly the highest point of the sideways trend and the lowest point. And we can see that the first support is within that sideways trend, and obviously the second support. But as you know, we don't use the second support to trade using the pivot point strategy. So the only point where we can trade this market now is the pivot points to buy, but at this point that is quite far away from the market, so I wouldn't place a pending order now. And also we have the German report coming out at 2 p.m. So at this point, I'll just leave this market alone. We'll wait and see. We'll reassess it again at 12 midday. Again, obviously, if there are any changes between now and 12 midday, I will send you a message through the Twitter handle. So I'll send a message through the Twitter, but I doubt if anything will happen. But again, it's not what I think would happen. I just have to wait and watch and see what will happen in the market. So at the moment, if you want, you can place a pending buy order just above the pivot point. But actually, let's do that. So like I said, there are no opportunities to trade using S1 or S2. So the first opportunity to trade is the pivot point. So we can place a pending buy order there. Again, because it's a pending order, if the market doesn't get there, it would not take it. So we can place it because it's just a pending order. My pivot point there is 1.2035. So I'll just place a buy order just 2 pips above that at 1.2037. So 1.2037, and then stop loss. So I use a 20 pip stop loss, so that's 2017, and a 60 pips profit limit, so that's 1.2097. So there I have it. So I've placed a pending buy order just above the pivot point with a 20 pips stop loss and a 60 pips profit limit. And obviously there are no sell opportunities because the S1 and S2 are within the sideways trend, and the market itself hasn't formed a market resistance or a market support. So there are really no sell opportunities, and the only buy opportunity is just above the pivot point. So that's it for the Euro-US dollar. So if you have any questions, do click the hand button or send your questions through to the question box, or if you want me to look at any other markets, do let me know. Okay, there's a question here. I'll just have a quick read of this question. So it said, explain slippage and how to handle slippage. Okay, slippage in the market means when there's huge market activity. So say for instance, this is a good example. Let me use this as an example. You can see here I have a pending buy order to buy just above the pivot point, and the level at which I want to enter this market I've stated is 1.2037. So I've stated I want to enter that exact point at 1.2037. But if at the time the market gets there, there's an increase in market activity. So if there's something's happened in the market and there's all of a sudden an increase in market activity, you can get what we call slippage, whereby the market will take me into the market at a different point as from where I stated. So I could be taken into the market at a level at 1.2040, for instance. So it might take me 3 pips away from the actual point I wanted to enter. So that's what's called slippage, whereby you're taken into the market a couple of pips outside from the entry point you stated. So that's why it's called slippage, because and that's usually due to increased market activity at that time. So yes, at periods of increased market activity, you could have what we call slippage, whereby you're taken into the market at a different point from where you stated you wanted to enter the market. And also it could happen with your stop loss too. So again, you could be taken out a couple of pips from where you actually set your stop loss. And again, that's due to slippage. So there's really not much you can do with slippage, because like I said, it's just due to increased market activity. And if that happens around the time the market gets to your entry point level or your stop loss, you could get that slippage. And so it's just good to note that, but there's not much you can do to avoid slippage. It's just part of trading. Any other questions? Any other questions, comments before we wrap up the morning session? Brilliant. Okay, good. So if there are no more questions, I'll leave you to your trading. Like I said, always remember to stick to the 3 M's, which is what we're going to be doing over the 2 weeks. So we'll meet again at 12 noon, GMT +1. We'll meet again at 12 noon and see what's happening in the markets. And like I said, in between, I'll update you via Twitter. Okay, so have a good morning. Take care of your trades, and we'll speak again at 12 noon. Take care, and God bless.